It's Maroon 5. It's Sugar, baby. 8:41 now. It's 19 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And the Legal Beagle Talk means that it's time to check in on your finances and see what Wall Street's doing to us this morning. And I fear it's to us, and Phillip Statler's on the phone from Statler Financial Services to help out. Phillip, I want to start a petition to have Melania dump Donald Trump's cell phone in a White House toilet again. How about you?
Hey, man, I tell you, if he just would have been quiet, then today might have been a beautiful day. But so far, there's a lot of red ink he's caused.
Yeah, offhand, I'd say it. Yeah, we took to the social media last night after a relatively flat day. Yesterday, the Dow was down $1.35. S&P was down $2.60. Nasdaq actually gained $53. Actually had a relatively quiet day. The one dominant news story that was out was the government saying that they weren't going to let Harvard admit any more foreign students, which was kind of weird, but that was about the extent. Then the president hit his social media feed, threatened a 50% tariff on all European goods coming in, and if that wasn't good enough, he decided to go after Apple and say specifically, if you don't move your iPhone production to the United States, I'm going to slap you individually with tariffs too. I mean, what are we going to do with that boy? I think flushing his cell phone is about the only valid choice we got left.
Yeah, that's probably about the only thing we can do, Dave, I'll tell you, because, I mean, of course, he'd probably find a different way of doing it by then. So,
yeah.
But it is just, yesterday ended up being not a bad day at all. I mean, yeah, we had some red ink, but it was minimal red ink. But today, it's a bloodbath again. Not as bad as we've seen before, but still pretty bad.
By and large, it was there. The bond market kind of stabilized a little bit, too, after starting out, 24 hours after the bond auction on Wednesday with a really rough overnight. We ended up staying relatively flat, but it still needs to be mentioned that 30-year Treasury yield right now is up still just a tinge over 5%, and that's the highest it's been since we ramped into the 08-09 mortgage and housing crisis. Is the highest we've seen a rate for the 30-year bond since way back in 2007. That can't yield well for housing reports, and we got one yesterday that wasn't much of a miss, but existing home sales were a little on the quiet side, weren't they?
Yeah, they were. They expected existing home sales to come in at a little over 4.1 million. It only hit 4 million existing home sales, and that was just a tad less than what it was in the previous month. So we're seeing that slow down. Now today at 10, we get the new home sales, and so we'll be looking at that to see how that did. They are expected to be down a little bit from last month, but with interest rates as high as they are, it won't surprise me.
It's going to be a market-moving report just based upon what the interest rates look like. They'll also give us building permits about that time as well. And again, anticipation as to whether or not they can sell the home they're talking about building. I got to believe spec homes are going to slow down at least a little bit, wouldn't you figure?
I think they will, Dave, just from a banking standpoint. If they're not being paid for with cash, I think the banks will start to pull back a little bit on loaning.
That does make some sense. So the yield's going up, and that's driving up the mortgage rates down the line. And there's just a whole bunch of other junk going on as well. And what really scares me is that fear and greed index that I monitor so carefully, it tends to measure the amateur investors. Even with the upsets going on, the fear and greed index is still way up into the greed range, which kind of gets into that fear of missing out syndrome that you and I talk about in amateurs regularly preceding the crash of a market, don't they?
Yeah, it is. And, it may change today, after today, if we see what happens at the close today.
Absolutely. Sidebar stuff, but it's interesting at the very least. Tesla has obviously been on the on the volatile side lately. Some of it was self-inflicted with Elon Musk going off and working for the government for a while. Some of it just the fact that there's more competition. Tesla is no longer the number one selling electric car in Europe. They got outsold by Bidi, a Chinese manufacturer, outsold Tesla by a few hundred units in Europe last month, and that's one of the things that ought to make the board of directors at Tesla sit up and take notice when it's a brand that we haven't even heard of on this side of the pond.
I said I hadn't even heard of that one before. I mean so to be beat by a no name, at least a no name brand from over here anyway.
Yeah, it's not your father's Bidi. Have you driven a Bidi lately? It's a Chinese manufacturer that if they start advertising, I'm thinking advertising slogans all over. Here's another indication.
Hey, get this one. Do you have an old Bidi?
I was trying to avoid that because I'm kind of woke somewhere. Have you ever heard of the company Claima?
Not heard of that one either.
They underwrite a lot of the buy here, pay later funding things that you find on the website stuff. Buy now, pay later. We'll finance it. No interest, no finance charges for 6 months. They are mostly funded out of Sweden, and they reported this week that consumer credit losses on those buy now and pay later things up 17% for the first quarter compared to last year. Their revenue went up to $700 million. People are using them like chiclets, but their net losses have already doubled to $99 million on those marginal buy here, pay later schemes on the websites.
Man, that's a big cut there.
Yeah, the rose gardens are not exactly growing fast at the moment, and I'm starting to feel like the cynic in this twosome, aren't I?
Yeah. Hey, I also saw Japan came out with their inflationary number. The highest it's been in a while. Their inflation's up 3.5%.
Woo! They're in our league all of a sudden, aren't they?
Yeah, they really are.
So, other than that, the only thing I'm mostly in tidbit land today because there isn't anything substantial coming out of the government. But mergers and acquisitions. The guy that owns OnlyFans wants to sell it to an investor group for $8 billion.
OnlyFans, huh?
Yeah, it's a thrill a minute over there. Not many reports out, but I gather you got a couple that might impact the market this morning, huh?
We do have a couple. We don't have necessarily the nitty gritty details on some of them, but Intuit reported, the tax QuickBooks guys, they reported better than expected, and they really raised their full year guidance up quite a bit from where it had been, and so it's got Intuit up substantially. It's up 7.33% this morning.
QuickBooks being their 12-month-a-year product that they sell, they moved it to a subscription basis platform over the last couple of years. Maybe that change in business plan has helped them a little bit. You can no longer just buy it and then pray it'll work. It's a monthly subscription now.
That's right. And even if the only way you can actually get it now is on a licensing subscription basis. They're not updating any of the other desktop stuff. You can get new desktop stuff, but it's still on an annual subscription basis to get if you want the updates. So, and then we've got Ross Stores. Now they had a little bit of an issue this last quarter. Profitability sank. Full year guidance, they pulled it and not giving any guidance. And so they're down. Oh, this may be a big loser today. Down a little over 13.5% this morning.
Ouch. That's kind of a syndrome we've seen in other downturns too. The prime store retail locations hang on to their stock a little bit longer. That means the off-price chains don't get it in, and it's harder to sell anything when you don't have it.
Oh, yeah. Oh, I thought I couldn't beat that, but I can. Deckers Outdoor. Now, they're the makers of UGG boots, which used to be pretty popular. I guess they still may be. But they declined to pull out their full year guidance for 2026 fiscal year. Too much uncertainty related to global trade policy. And so they exceeded the results on both the top and bottom line. But that right there has got them down 19.5% this morning.
They're not being very charitable when a company pulls its guidance this quarter, are they?
They are not at all. Let me close out with one more, Dave. And this
Yeah.
was not necessarily an earnings, but we talked about Xerox last week when they did have earnings. Just an update. I didn't realize, I thought they'd already bought Lexmark, but I guess they hadn't. So they're buying Lexmark, the other printing company. And in the process of doing that, they're cutting their dividend by 80% from 12.5 cents a share to 2.5 cents per share. And so they're taking it on the chin as well, down about 8.8% this morning.
Offhand, it sounds to me like the statement that they were buying Lexmark did not say they expected the revenue to be accretive.
Yeah.
favorite phrase in my industry: you buy a profitable radio station, the revenue impact will be accretive with our new acquisition. In other words, it's going to go up. Evidently not with Xerox and Lexmark. Once again, it was kind of a flat day yesterday, a little bit in the growth stocks on NASDAQ. Otherwise, everything else was just flat to slightly pink. I see a big knee downward on my futures curve this morning. 45 minutes. What are we looking at anyway?
A lot of red ink, Dave. A lot of red ink. We've got the Dow down 1.2%. The S&P 500 is down almost 1.4%. And the NASDAQ 100 is down 1.75%. Let's not leave the little guys out. In the Russell 2000, down almost 1.9%. So it'll be an interesting open this morning as we get started. Silver's up, gold's up a big bunch. Silver's not much. Gold, 1.75% jump this morning. On the other side, we got crude oil down 1.3%, $60.42. I saw an article that said that the Memorial Day gas prices was the lowest it's been in, I don't know, so many years. So that was some good news.
We'll take that happily down the line. Bitcoin, by the way, did lose 2.25% overnight, but they're still bumping their nose on 109,000. So some of the relief money appears to be still going over there. Although if you bought yesterday, you're down 2.5%. So volatility reigns. Overseas markets, the Asian Rim generally off overnight, mostly on the strength of the Chinese mainland markets that were down by almost a full percent. European markets are generally off as well. They didn't like a doggone thing President Trump tweeted overnight last night. The median European market is down 1.7% halfway through their trading day, and we would call that a major sell-off, wouldn't we?
Yeah, we would. We would.
I think so. I'm glad I'm not into a lot of European stocks, but my retirement fund does need some stabilizing. How do I find you to get a plan in place?
Dave, that's why we developed the Core Retirement Design to help people design that retirement they always dreamed of. Then give us a call at 863-382-0037 to schedule their core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And we're here every morning about this time on Light FM to bring you up to the minute. We'll see you next week, my friend. Have a good weekend.
All right, buddy. Y'all have a great Memorial Day weekend, and we'll see you next week.
Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Once again, I want to thank you for joining us today. Have a great day. I look forward to speaking to you next week. Bye now.